Thank you for everyone to participate today's webinar. So I will start after I share my slide first. Okay, so thank you very much. So today's webinar topic is Web3 Digital Assets. So and we are interested in the Metaverse, the DeFi, and NFT and CBDC Convergence. So we have 6 distinguished speakers today. So we are going to touch in a very broad topic. So you can see the what is the Web3 digital asset, and then MetaFi, what is meant by the MetaFi, and then combined with the NFT, and then CBDC is the important topic, and then some Metaverse economic system. We know about create economy or other economy, and then legal issues. And then Alex is expert in the legal issues and investing, and also MetaFi, NFT, CBD all combined and what happened. So after my introduction, so here is a schedule. So we have a busy schedule. So the individuals talk, it will be delivered for 10 minutes. So either presentation or talk. So first will be Alex, and the next will be Najari. And then I think that if they are not joining in time, then we can change the order. And then third will be, yeah, you're Yael, you're in the third, and then Jim and Kimberly, and finally but Aline. So after this individual talk, we'll join as a panel discussion and Q&A. So the for individual talk, if you have any question, and then you can write down in the chat, and then individual speakers will answer you during the talk and presentation. And after lecture, we will have another discussion and Q&A session, so you can participate actively at the end of our individual talk. Okay, so without any delay. So first, our speaker is Alex. He will talk about the legal aspect of this digital asset. Alex.
Thank you. And thanks for the quick intro. So what I want to speak about today is just a very foundational topic in the blockchain space in terms of the kind of legal side of it. And that's really when are tokens and NFTs securities? And that's really the kind of the big question that we have. So the reason that this matters is projects can be fined heavily if they kind of cross into the securities territory. And that's why, we've had a lot of clients in the past, ranging from exchanges to projects coming up to just individuals who are in the kind of ideation stage of their startup, coming to us because significant penalties can come down onto projects who have just kind of proceeded with without kind of worrying about the consequences or whether or not they'll be under the jurisdiction of regulators like the SEC, or in my case, the Ontario Securities Commission. So as you can see here, in 2021, the SEC imposed a $7 million civil penalty against Loki Inc. for issuing an unregistered security, which was their token. 2019, the SEC fined Block.one $24 million for an unregistered ICO. And just this year, Hester Pierce of the SEC has warned that NFTs could fall under the definition of security, and that he's looking for regulation to come and clarify that. So bringing it to basics, what's been applied to kind of whether or not a token or an NFT, because remember, an NFT is just a different type of token, the ERC20 versus the ERC721. It's the how we test that applies. And there's kind of 3 basic principles here. First, is there an investment of money? Second, is that investment of money in a common enterprise? And third is that with a reasonable expectation of profits derived from the efforts of others. So what I'm going to do is I'm going to break down each prong of this test, and then I'm going to apply it to a token and an NFT. And just to clarify, all three of these tests have to be kind of met for something to be considered a security. If one of them is off, then you're okay. And it can be applied retroactively as well. So if a regulator decides, oh well, you know what, looking back on it, that kind of looks like a security, and we didn't go after them at the time, but we should have. That can happen as well. So first is the easiest, an investment of money. All this really means is there's been an exchange of value. So this doesn't necessarily mean you have to pay in fiat for a token or offer a token for fiat or an NFT for fiat. You can offer it for, for any other cryptocurrency, any other token. It can be an NFT exchange, those sort of things. It's the definition is a lot broader than an investment of money. It's really an exchange of value. Now, the next two prongs of the test are a little bit more specific. So in the context of digital assets themselves, the SEC considered a common enterprise to arise because of a connection between the profits that were earned between the purchasers and the success of the promotional efforts of a centralized team that's kind of driving the project. And that's why there are three kind of main questions here. Is there any reliance on management for the success of the project? Is there a significant number of tokens being held by a central team? And then three, is the project centralized? And the third question is very important because what we found is usually when projects are fully decentralized, it greatly reduces the likelihood that they'll be deemed a security. So I think we have okay. So the third prong of the test is whether or not reasonable expectation of profits can be derived at the efforts of others. So what this is really meaning, and there are certain factors that have been kind of laid down by the SEC and regulators here in Canada as well, and they kind of stem around these five categories. Now, one is does the success of the project rely on the management of a central team, and this kind of bleeds back into the common enterprise prong. Two is there a right to share in the profits of the project? And this doesn't mean just directly like a dividend entitlement. This can also relate to any appreciation that's kind of can be tied back to the efforts of a central team or management driving the project's value forward. Three, is there opportunity for secondary trading? And this is where a lot of projects fall under, even if they're decentralized or things, or they're very like, I guess would be held low risk on this prong, but many projects are on decentralized exchanges or centralized exchanges. So that's just one aspect where you're kind of leaning more towards the security side. Four, does the purchase not fit its utility? And when I say that, it's really meaning like, let's say a token, you're purchasing a token that's really a governance token, and you're buying 20,000 units when really most purchasers are buying 10 or 20. If the volume of the purchase doesn't really match the utility that the token is being kind of promoted for, then that's one factor that the regulator will look at to say, well, you know, these people are actually buying this for investment purposes, and it's looking more like a security at that point. And finally, is the utility of the token actually live? So if it's a governance token or if it's a staking token and you can't stake it, or you can't use the governance function, then really, you know, you're purchasing that for the intent that those functions will be live later on, and the value that those functions will bring will increase the value of what you've purchased. So those are just some of the main factors there. Now, if we go into a quick case study, I didn't want to just pick something like Bitcoin or Ethereum because those are more of the obvious choices. I wanted to do a little bit of an analysis with you all on two kind of projects that are more, I guess, would be less clear just on face value on whether or not they would be classified as a security. So first one I picked was Polkadot. So if we run it through the test very quickly, one, obviously there's a value exchange there, whether or not you're buying it for fiat or you're buying it for token, there's a value exchange. Number two is Polkadot is a decentralized protocol. There's no really kind of like board of directors that is controlling the operations. And that can be evidenced by number three, where DOT tokens are governance tokens. And for staking, both functions are live, but at the same time, there's an opportunity for trading on secondary markets. But because the decentralized status of it holds a really strong factor in whether or not a token will be considered a security, that's a really, really strong foundation, and in my opinion, makes it unlikely that Polkadot would be considered a security. And I think there's a lot of evidence behind that as to the myriad of exchanges that offer Polkadot, especially in Canada, where the regulation is pretty tight on what exchanges can offer in terms of their tokens. And we've seen the most compliant exchanges and many exchanges who are just starting off be able to use and offer Polkadot without coming into any trouble. And the next one is an NFT, because I wanted to make clear that NFTs are not outside of the scope of securities law. And because of this kind of big boom that NFTs have had over the past year, it's very likely, in my opinion, that some kind of regulation is going to come in and specifically target them, even though the current regulation does kind of fit in, because technically speaking, you know, an NFT, a classic NFT is in ERC 721 or something like that. And really, it's just another form of a token which could be applied to the same test. So applying that same test for now until more clarified regulation comes up, or any other different treatment would come up for an NFT, I would use this test. So first, there is a value exchange, obviously. People are buying the NFTs for something. In the case of Bored Ape Yacht Club, there seems to be central management, that's Yuga Labs, that seem to be running the show, driving operations, creating partnerships, promoting the project itself. Now, three, because it's an NFT, the owners of the NFTs do have the right to the commercialization of their NFTs. So profits in that sense would come at their own effort and not of others. However, because of the existence of secondary trading markets like OpenSea, and because of Yuga Labs' efforts to promote and grow the project with recent developments like ApeCoin, it seems to be that this part of the test could be met. And even though at its inception, something like Bored Ape Yacht Club would unlikely be deemed to be a security, given its growth and the development of it, especially by Yuga Labs itself driving that growth, it seems to me that it's getting closer and closer to meeting the test of security. And I'm seeing a lot of NFT projects follow this path, where it's they're offering more and more and more, and some of them have even gone as far as, hey, you can have entitlement to certain profits, or you can get something almost like a dividend. And it's really a shame to me to see, because I don't want another kind of blanket regulation coming down and kind of hampering any innovation. But the growth of NFT projects like this and their kind of development into other areas, it's starting to get a little bit iffy in my opinion. So I think it's something worth keeping watch on. But that's a little bit of a kind of like a few minute kind of crash course into, I think, what's a very foundational topic. And I hope you enjoy it. And if there's any questions, feel free to ask.
Alex, if you're speaking, you're on mute.
Yeah, I just put myself on mute in case anyone had questions.
Oh, Alex Lee, sorry.
Okay, so thank you, Alex. So if have any question about his topic, then you can write in the chat. Okay, thanks. I didn't know that because yeah, Neeraj, yeah, next will be Neeraj is he is an expert in all aspects of metaverse, especially he's a pioneer in the MetaFi and other like Web3 topics. So he will be deliver like a very important topic. What is the building block of the metaverse with respect to the Web3?
All right, thank you. I'm the CEO of Lucrisma, which is a startup that's trying to build a financial services company that's metaverse first. So I just wanted to start off by giving you guys a flavor of the size of the market, crypto market in general, but also the metaverse, and some of the projections, which are truly mind-boggling, in my opinion. So the crypto market has increased exponentially in the last few years. At the recent peak of the current cycle, it went up to 2.2 trillion. It's crashed significantly since then, but it's still quite significant. The number of users that now have crypto, either active traders or passive traders, has also had an exponential growth. You guys can see some of the graphs there. The revenues as well are going up. There's a lot of awareness of not just the prominent the Bitcoins of the world, but also some of the altcoins and some of the ecosystems that are building. So there's definitely been a surge in interest amongst different communities. The metaverse is the latest ecosystem or the environment where the blockchain and the crypto and the immersive experiences are coming together to deliver what's going to be the new web, right? So a lot of the people would realize what happened when Web 1.0 came along and became commercially available, and then Web 2.0 in the late 90s and early 2000s, which led to some of these businesses that we use in our daily lives, the likes of Amazons and Ubers, etc., were all from the Web 2.0. And now Web 3.0 is on us, and Metaverse is going to be the world where people will go to utilize these services. The target market for the Metaverse as well as crypto in general, they're both kind of aligned. Obviously, the younger generation, the Gen Zs, the Gen Xs are more prominent. They were born into some of these equipments that are needed to partake in the metaverse. You know, the immersive, the Oculus-like glasses, the contraptions that you have to your wrist, etc. So they're more at ease with these equipments. But as things evolve, as technology evolves, the projections are even the older generations would partake. Andreessen Horowitz recently conducted a very comprehensive research about what are the building blocks of the metaverse. I'm not going to go through all of them, but essentially, the metaverse is going to build on top of the decentralized world that has been ushered by the blockchain technology. So one of the big characteristics of the metaverse is that when a user comes in, they would be able to interact with their with other members of the metaverse in a peer-to-peer fashion. There will be ownership of the assets that they buy or trade. There'll also be transparency and full audit trail because everything's on the blockchain. And I guess from a user experience perspective, the interactions that they would have with the businesses that they operate in, or other entities that they interact with inside of the metaverse would be significantly better and almost lifelike, significantly better than the Web 2.0 experiences, which are two-dimensional. But in the metaverse, they'll be able to play with the products. They'll be able to interact with the products in a three-dimensional fashion, and the real opportunity for businesses that are trying to set themselves up for this revolution is to make sure that they are thinking about educating their customers in a format that they would understand in the metaverse, right? So, like in the current world, you guys are familiar with almost everybody using infographics or explainer videos, or having all these documents that are available for download. All of that's not going to work, right? Or all of that's not going to work in isolation. That's going to be helpful, but what's going to work is when your products and your offerings are available for people to explore and get their hands on and interact with, and really understand how the offerings work, right? So one of the core principles of the metaverse is that when a customer or a user comes in the metaverse, it's their avatar that's coming in, and through that avatar, this person is able to have a lifelike experience in interacting with your offerings, right? So companies that are setting themselves up for success in this world would do well to think about how they can make their offerings work in that space. So there's a lot of new skills that companies have to pick up: the spatial engineering, the AR, the VR aspects of it would need to be picked up. Some of the core building blocks of the metaverse is decentralization, obviously. So I'm not going to talk about that. That's at the core of everything. Property rights. So this refers to the ownership of the assets that you either purchase or you trade inside of the metaverse. These could be a parcel of land. It could be an NFT of some kind, or it just could be a wrapped version of a physical object that sits in the real world that has been created inside of the metaverse, and gives the owner the right to both the digital as well as the physical asset. And a lot of businesses are now looking to do that. So especially the fashion brands and a lot of businesses in that space are coming up with their lines of shoes, for example, where they sell those pair of shoes in the real world, but they have a replica of that inside of the metaverse, and there's property rights there. Composability and openness, as well as community ownership, refers to the ability for an ecosystem to allow the community to come together, and the communities can be divided or can be aligned along multiple lines. It could be community of yoga enthusiasts who are getting together to offer the yoga classes through there, or it could be fans of Decentraland metaverse, whatever, right? It could be community that's aligned on any topic, and the ability for them to have some kind of social immersion, ability for them to have trade between them, ability for them to have some kind of dialogue, ongoing dialogue between them, which is social. There's elements of social, there's elements of commercial, there's elements of being part of that virtual world and the openness on that. Underpinning all of that or enabling all of that is the identity. So if you come along as a user inside of the metaverse, you need to be verified, right? So for most ecosystems would like you to be KYC AML, would like you to be verified and provided with a unique identity, which would allow you to be known. And especially, for some businesses, it's a prerequisite to before they allow you to trade, because of the law of the land and the compliance and regulatory obligations. They want to verify your identity and give you a unique identity. But what's going to happen is each metaverse is going to have their identity, but then services are going to emerge, just like in Web 2.0. Microsoft came up with the identity, Okta, Centrify, and a bunch of other players came up with this identity. Likewise, players are going to emerge which are going to stitch the identities. So I would be able to come in and say, okay, my name is Neeraj. This is my identity in Decentraland, and I can use that same identity to go into Sandbox and some of the other metaverses. So it's going to stitch together my identity. So everything we just spoke about is the focus of Lucrisma. We are trying to build together a framework which would allow us to provide this unique identity to our customers, and then make sure that their transactions are verified, make sure they're able to have all the benefits of the decentralized technology. And on top of that framework, we are offering a bunch of financial products and services. We are trying to build this new age financial services platform for an economy that's projected to grow to $13 trillion by the year 2030 and have 5 billion engaged users by that time. This is as per a recent study by the Citibank as well as Goldman Sachs. We are also trying to address the problem of education. Like I mentioned earlier, the educational methods so far that have worked for Web 2.0 are not going to work in this new world. So that interaction and the ability to have lifelike models is what we're trying to solve. And then we also want to provide access to people who choose to opt out of the metaverse, right? So not everybody's going to put their Oculus devices 8 hours of a day and be in that space. So a lot of people are going to opt to sit out of that metaverse, but we are building our solutions for them as well. So even if they're not in the metaverse, they can still access the economy and partake in its benefits. So our product is going to be built on top of this bidirectional bridge, which will take care of the identity and the security and provide all the educational assets and that amazing user experience. And more importantly, it's going to allow the bridging of assets between the real world and the metaverse and vice versa. So people who are in the metaverse can also leverage assets that are in the real world, and vice versa. People who are in the real world can leverage assets that are in the metaverse. Our roadmap is to deliver some of these products starting from Q3 this year, and we're coming up with a token launch towards the end of the year. And a lot of the metaverse specific artifacts we would be making available through our website in the near future, and people will be able to play with that and experiment and access them.
Thank you.
That's me.
Yeah.
I'm sorry.
Yeah, fantastic. Yeah.
Thank you.
Yeah, thank you. Yeah, always. Yeah, you're fantastic in your talk. I like that. Okay, so next will be Yael. She is expert in actually the very important topic, how actually the real life asset, like for example, real estate, house, whatever will be put into your metaverse. So, Yael, why don't you start?
All right. So from what I remember, my topic is moving real-world assets into Web3, which is not necessarily metaverse, but I'll touch on that as well. All right. That's why the, okay, great. So advantages of moving real-world assets to Web3, right? So let's just talk briefly, and I know the previous speaker touched upon kind of the movement of different environments where people interact from Web 0 to Web 3. And I want to showcase how assets move and, you know, through time from Web 0 to Web 3, right? So when you talk about an asset, it could be anything. It could be real estate, it could be private equity, it could be IP, it could be commodities, it could be equipment, right? So there's a lot of different assets out there. So basically, Web 0 had newspapers that would advertise, you know, something being sold, and people would show up to an open house, or you had shops where you buy gold, and you had, you know, banks that would act as intermediaries for you to buy assets and would be custodians, right? So that was kind of the Web 0 before really the World Wide Web. So during Web 1, what we saw is basically a way for asset owners to spread the word, right? So this is Craigslist. So you would list your asset there, and that would be a way for somebody to buy it. Now, in Web 2, you saw emergence of kind of different type of interactivity across the web, where you could have different services that you could actually receive on the web, like you could invest in projects through different platforms. So that was really an emergence of kind of these interactive platforms that took care of a variety of things, including due diligence and payments and some services, right? Some sort of asset management for the buyers. And then in Web 3, what we're seeing today really is not only the ability to trade the assets and to perform various operations, you know, with crypto assets, because they're so flexible and so liquid, we actually see the emergence of a completely new financial asset classes, right? So for example, staking pools or liquidity pools, decentralized exchanges completely changed the game, right? So with the real world assets moving in similar direction to be able to access different DeFi operations and services. And then of course you have, so this is a Decentraland, or maybe it's a sandbox map, where you can actually go out and buy real estate or so-called real estate or land in the not real world, but in the metaverse, right? So that's also not only we see new financial operations, but actually see completely new asset classes, right? So basically, Web3 unlocks blockchain economy for assets. And so it makes the most illiquid assets liquid, accessible, able to aggregate into asset pools and be collateralized, right? So what we're seeing with crypto, all of these operations, right? You basically with crypto, you take some sort of an ecosystem, create a token, which is highly liquid and usable in that ecosystem. And now it's this ecosystem is accessible and the token is accessible. You're able to aggregate those tokens into asset pools and could be collateralized to borrow against them. Now imagine all of these operations you could do against your home, or against your investment in a large commercial asset, or maybe against your inventory if you have a company, right? So anything on your balance sheet eventually will have access to the same type of operations. Now, you might ask, why should you move your assets to Web3? So the easy answer is to enable the owners of real world assets to access the world of DeFi, because it creates a lot of opportunities in finance, especially in the world right now where interest rates are going up and traditional finance is becoming expensive. traditional finance is restrictive for a lot of asset owners, and they're looking for opportunities for lower capital, lower priced capital, for being able to expand much quicker, right, without the constraints of traditional, traditional world of finance. So turning real world assets into digital financial products that can be sold, traded, and leveraged through the blockchain, that's basically kind of like Web3 asset building, right? So when you mint a token, and in general, how do you move a real world asset into Web3, right? That's actually, that's a process that has been developing for the last 4 years called tokenization. And so basically tokenization, the name itself suggests, is that you turn something into a token, right? So when platforms like Solidblock mint tokens for an asset, it's basically almost like an asset building in Web3. And you can also think about that in the Metaverse context, right? So when you build a home in the Metaverse, you technically create a new asset in a new space that might have a new value, right? So in the Metaverse context, and just in the context of general asset like real estate that you want to move into Web3, you basically are creating on some sort of a blockchain, right? So there's Metaverse, which is a certain protocol with certain rules, right? That's also a similar concept. Internet protocol, by the way, is also a very similar concept. When you're building a website, right? When you in Web 1, or when you are building a social media platform in Web 2, you basically are putting some sort of a code on a common protocol, right? So you know, even on Wix, for example, when you build a website. So in Web 3, you are literally creating a new asset on a new type of environment, on a new type of protocol, right? So if you're doing Metaverse, let's say on Decentraland, it has a code base, it has APIs, you know, it has its own rules, like land is scarce. The assets, you know, there are certain land parcels you can buy, and this is a certain way you can access. And when you, and you know, this is the height of the buildings and so on, right? So you can basically build a new asset with a certain set of rules, right? So that's basically almost like construction, right? We call website building, right? So now we have Web3 building on the Metaverse. And in the context of a blockchain, right? If I have this building and where I'm sitting right now, I can move it into the blockchain environment. I can take the Ethereum blockchain and I can mint ERC-1404 tokens, which are security tokens. Basically, I'm building a smart contract on the blockchain, which is representative of an actual asset, right? So literally, it's construction in a different environment. It's like building, you know, a new building on Mars or in the Metaverse or on Ethereum, right? You can build also a building on Polygon, you can build a building on anything, and the tool that you're using for that is a smart contract, right? So that's how we turn real world assets into digital financial product. Now, there is a compliance process for security tokens, which ensure that, and also for NFTs as well, for non-security tokens, you know, and not necessarily fungible or non-fungible. Whether security or non-security, there's always a process in the real world, which will ensure that when you buy those tokens as an investor or just as a buyer who's interested in some sort of a service, right, or utility, when you buy them, you need to ensure that you actually bought, like what you actually bought, right? There's usually a tie between the two worlds that is kind of a standard industry standard. So in the security token world, what normally is done is that you create a company in, let's say, a Delaware or a Wisconsin company that will hold an asset. It could be either an inventory, it could be real estate, it could be any sort of a contract. You basically buy a contract or you buy an asset, and then that company buys a contract or an asset, and then that company will issue securities in the real world, right? You issue a security compliant with certain regulation, and then how do you actually, and then the fun happens, right? The fun happens So basically, you take that security, which is issued in the real world, and you start recording the ownership of that security on the blockchain. So that's how technically we're putting Web3 assets on to the blockchain smart contract. So if I went out and bought a few shares in a company that owns an asset, now my purchase will be recorded in the Ethereum or Polygon or whatever ledger, right? So now that what you're building essentially on Polygon and what you're building, you know, on Ethereum is books and records. That's the representation of an asset, is the ownership stack. You're building what's called the ownership stack, or sometimes it's called the capital stack. Now, mind you, not the whole asset will go onto the blockchain. Usually, just a part of the capital stack is going onto the blockchain. Sometimes 20% of what's called equity. There's equity and there's usually debt with assets. So the equity, part of the equity stack is going on the blockchain. So we'll see parts of assets living there, right? Not all of them. So basically, you know, I really like the slide that the previous speaker showed with kind of like the breakdown of the metaverse. And it's funny because when we go to Decentraland, we see like really exciting, you know, images and shops, and you hang out and you see people, and then you see kind of like a black screen with just the writing, what actually the components of the metaverse are, right? And kind of the back end and the front end. Now, same thing is here, right? When you go to Ethereum, like Etherscan, what you really see is a table, and it's a cap table technically. It's basically who bought what. So that's what the code, that's what the smart contract looks like in the context of putting an asset onto Web3. It's a cap table of who owns the asset. Now, that's not the only thing that actually is built via smart contracts on Web3, and we're going to get into that. And that's where actually, like me as a finance professional, that's for me, that's where the fun really begins for me. Because once you kind of imagine the building blocks of assets on the blockchain into that in that environment, you really sky's the limit, and you can start thinking about new products and new ways to enhance the asset's value and new ways to leverage assets to access even more liquidity. So any asset can be tokenized. This is the process, how you tokenize. You take the asset, you mint the token, meaning you create a smart contract that will tie investors or buyers to the specific fraction, right? So that's, again, that goes, your ownership will go into the cap table on, let's say, Ethereum, and you'll see it on Etherscan. So now the fun begins. Now that this cap table is living on the blockchain, now you can, of course, trade, right? You can trade peer-to-peer, you can buy, sell, whatever you want, because now your ownership is a token, and that's the purpose of tokenization. Tokens are much easier to deal with. Now, because in the security token space, you have compliance layers, we actually can introduce certain limitations through CeFi platforms, actually. We can introduce certain limitations that require you to pass KYC AML accreditation before you can buy the said tokens. And actually, that kind of innovation was brought in by Solidblock when we tokenized the St. Regis Aspen Ski Resort back in 2018. We were the first ones to tokenize commercial real estate asset in a compliant way, meaning that we required every investor and every new buyer to go through compliance procedures before they're put on a whitelist and able to alter. And the blockchain only then is able to alter the cap table, right? So, or able to, rather than alter the cap table, but allow transactions that will alter the cap table, right? Collectively through, of course, the blockchain mechanisms, right? So again, immutable, decentralized, and so on, with one centralized component through which a certain platform can perform KYC ML. Now, in the future, I think that even that can be decentralized. That's a different type of story for a different time. Now, so the token buyers are now owners of the asset. It could be partial, it could be a full ownership. It could also be a utility, utility, right? Examples of utility would be, of course, when you take, let's say, a home and you sell it as a whole via an NFT for the person to enjoy, right? For the investor to enjoy and use, and it doesn't have to be sold in the real world. You don't have to buy a title. You can actually buy an NFT representing that. So you can buy also you can buy a VIP status, meaning like a timeshare where you can stay in a hotel for let's say a week, right, out of a year. When we, by the way, just launched a project like that with a New York hotel called Nomo Soho, and users are going to OpenSea to buy a right to stay in the hotel. And then what happens next? You have all kinds of Web3 finance operations. So let's go through what those Web3 finance operations are. So there are generally three main use cases. And by the way, I also like to think about tokenized assets as a kind of a digital derivative of a real asset, right? So with securities, there's always a tie between that digital derivative and the actual asset. And you can trace that. You can trace that through investment documents and so on, what that tie is. And also in some platforms like Solidblock, you can trace the actual you trace the actual corporate registrations, for example, in the metadata of the smart contract. And I think that's actually a very, very important feature to look out for it when you're using a platform to mint tokens, is when you can actually, when the platform allows you to place that real world information into the metadata of the digital derivative. So basically, three main use cases include investment. Of course, you can come and put the money in, investment or purchase rather. And then you have DeFi, leverage, and NFTs as kind of the use of the asset, because you can use the asset as a collateral, right? You bought the asset, it's yours now. Now you can use it as a collateral to go and get a loan. Or you can actually sell NFTs. Let's say you bought an asset, now you can sell NFTs to people who want to come and rent it, right? So new models again, right? Imagine if you are kind of a realtor or you own Airbnbs. Now this world is going to offer so much to you, right? And then finally, store of value, right? Because this is a big one right now with inflation that's soaring, and with crypto that is super volatile. Like, where do we go, right? You're not gonna put your assets in like USDT because dollars is also getting cut every year by 7 to 10%. And crypto is super volatile, and if you need to use it tomorrow morning. So what we're going to see a lot is index fund instruments aggregated. We already see a lot of ETFs that combine corporations that own crypto, corporations that deal with blockchain, crypto, of course, Bitcoin and derivatives and so on. But what we're going to see next is kind of all of these assets that are combined and sliced together across different fields, right? It could be trade finance, it could be loans that have been aggregated. It's just going to be such an interesting world of instruments. Some of them are stable coins, especially outside the US, where the regulation allows you to collateralize them with real assets. Some of them are just indices, especially in the US legal environment. And I know that I'm running out of time, or maybe I ran out of time 2 minutes ago, but just to recap why we're moving assets to Web3, it's to access financial services for tokenized assets and to bring traditional assets into Web3 and maximize benefits to all stakeholders. And what are these use cases? What are these financial services? I'm going to start from here. We mentioned books and records, otherwise known as cap table of ownership on the blockchain, enables you to trade on CeFi, centralized finance exchanges, and DEXs, decentralized as well. So trading is the beginning of all, because that's liquidity. Without trading, without listing, none of the other things, well, I guess the three things, collateralization and structured products would not be possible. So the books and records are allowing us to automate a lot of the digital asset management. You can use smart contracts for payment of dividends and interest to the buyers of any asset, right? Why would you buy an asset? Well, some of the assets hold long-term value. Some of the assets get paid dividends and interest. along the way. Blockchain enables much easier payments. You can pay with stable coins, and you can actually put the money straight from the users of the asset. Like in the real estate context, that would be somebody renting an office, for example, or somebody, you know, all the leases that an asset has. And then that money will automatically be transferred minus the management fees to the investors. Or if you have a trade finance scenario where a company has an inventory and they want to tokenize that, actually the buyers, the investors of that inventory can, you know, can have access to that inventory should they need something, right? And that happens a lot, by the way, in the banking environment. You have kind of like inventory of capital and inventory of loans. So decentralized governance is a big one, right? So because basically DAOs or another form, I'm sure there will be other forms of decentralized governance emerging as the new evolution of the DAOs. And that enables us to give investors more rights and have help them decide collectively, and as opposed to the old world where you invested and the money is sitting there and you have no decision making whatsoever on when you can sell it. You're dependent completely on the original owner of the asset. Collateralization of tokens we discussed, where you can borrow and lend against these assets, and this will allow how much, like 1 billion or 2 billion people that are still debanked to have access to capital when they need it, because you don't have to own a whole asset. You can own a fraction of the asset, and you can own it in a decentralized manner. So this is a big one in the emerging world. And structured products, as I mentioned, is going to be a way to really access liquidity, because liquidity usually comes with aggregated products. Liquidity is much higher for bigger products because risks are much more diversified. And the key in the structured products is going to be benchmarking, evaluation, data, being able to structure really good and high performing assets. So thank you so much.
Oh,
I'm done.
yeah. Thank you very much. Actually,
you.
I'm a huge fan of the like a real world asset tokenization. So we will discuss further, because Aline is supposed to have a very important client meeting in 10 minutes. So Jim, actually it's your turn, but she is in some emergency situation. So could you let her talk before you?
Sure.
Okay.
Definitely.
Thank you very much. Okay.
Thank you.
Yep. Okay, so you can go ahead. Yeah.
Thank you very much. Hello, everybody. So I'm going to talk about investing in Web 3.0 digital assets with a big focus on NFTs. So I guess the same questions apply in the Web 3.0 as in the classic physical world when it comes to investing. It's like, what's your risk profile? What are your expected returns? What's your timeline? And how much are you willing to invest? So we've been advising both ultra high net worth individuals and brands and companies in terms of investing in Web 3.0. Investment opportunities are falling under 3 categories: buying startup shares, buying cryptocurrencies, or NFTs. So we have 3 different categories. Shares in Web 3.0 startups, I guess these are the private equity or listed. We're looking at Coinbase, Meta or Facebook, Block, Nvidia, and the likes of it. But that's something I'm not going to dig very much into, because I guess everyone could find public information about these. When it comes to cryptos, there are 3 different ways to invest in them. One is gaming, the other one is crypto trading or arbitrage. Web 3.0 tokens, the most interesting ones that we are looking at these days are Helium, Storage, Ocean Protocol, IOS, and Parsecue. These are the ones that we look at very, very closely. When it comes to arbitrage trading, I guess the we see quite a few of our clients still making money in arbitraging between Bitcoin and other less famous cryptocurrencies. Now, when it comes to NFTs, that's the bigger piece of the cake, if I may say so. So non-fungible tokens, what are non-fungible tokens? Well, fungible tokens are cash or gold, things that can be exchanged for a similar item, and it will have the exact same value. Non-fungible tokens are assets that cannot be exchanged or substituted for a similar asset. So a car, real estate property, piece of art. The gas that you put in the car is fungible. The car itself is non-fungible. It could be a collectible, it could be of a different make, different styles. It is unique in its own way. So what do we do with NFTs? Where are the opportunities? Where are the investment opportunities with NFTs? Well, some NFT investment opportunities are sort of quick cash, and some will be more like long-term investments. I guess long-term investments, one could be looking at micro IP. Again, thinking like Scooby-Doo. I'm thinking like vintage type of childhood memories that we all have. Some of these IPs are big. Okay, James Bond, that's a big one. It's probably not available to invest in, but there are quite a few of smaller ones, which, depending on which country and which culture you're from, might have value in the market of that country or that continent or that language region. So these are real opportunities with NFTs. And what we see now when it comes to IP development is really the tail of the market, but the tail of the market is really a lot longer than we think. So now a few facts and figures about NFTs. Below 18-year-olds are so matter of fact about NFTs when all of us are still like trying to understand what NFTs are about. Below 18-year-olds all know what an NFT is and know what to do with it and how they would use it. Another interesting figure is that 37 to 41 billion US dollars have been invested in NFTs between the 1st of January and the end of April 2022. So NFTs are here to stay. It has become a sizable market. So, you know, what do we know about NFT investors? More than 90% of NFT buyers are men. Of course, I'm sure you've all heard about the big figures, like the NFT art that's been sold for millions and zillions. So the most expensive piece of art sold as an NFT so far has been Pax the Merge, sold for 91 million US. The second most expensive one you've heard about, I'm sure, is Beeple Everyday, sold at 61 million US. And the third most expensive was Beeple Clock, 52 million US, and CryptoPunk 25822 at 23 million US. So in a nutshell, yes, there are lots of investment opportunities, short-term, long-term, big and small, into NFTs. 98% of NFTs will not be good investments, like in any other asset category. Now, what's really interesting is to look at what problems do NFTs solve. They solve a transparency issue, traceability issue. They allow content creators to earn royalties, which are very well deserved. They offer database reliability and IP protection. So concrete applications of that, I'm sure you've heard all about it in the art world, in the luxury goods world, like somebody mentioned earlier, I think was Neeraj, about the pairs of shoes that, you know, Dolce & Gabbana created with an NFT. In real estate, Yael just mentioned a few fantastic applications of NFTs, whether it's for rental or purchase. But the very interesting bit is that some of these NFTs will be needed by governments in another few years from now for inheritance purposes, tax purposes. Marriage certificates will be saved as NFTs sooner rather than later. And land ownership records, I'm talking about physical land ownership records, real estate ownership records. So I couldn't agree more than with Yael, who's just been mentioning some of these applications. Now, another application of NFTs and another potential investment is to invest in NFTs, which are like tokens that will give somebody like 10 minutes FaceTime with like Djokovic or, you know, politicians or sports people. So it really depends on, are you looking at investing in digital assets and NFTs as an individual, as a brand, as an asset manager? So we help some of our clients with these, like asking the right questions and looking at realistic expected returns. So that's all for today, I guess. Try to be brief. Alex, thank you very much.
You. You know, like, I think that your insight is very valuable because I'm like cover completely. I'm like a little bit like something perfect ways to something is my style, and then I try to have like investing side, and then you were the like one of the really nice visitors for today's talk because you delivers the investing aspect of the Web3 and digital asset. So yeah, I understand you're very busy, and then you have I already know that you already have some appointment today, but even with your busy schedule to attend and then give a talk. So thank you very much. Okay, so next one, Jim. Finally, yeah, thank you. Okay, so Jim is he is also the expert in all aspect of the metaverse. He is also my favorite speaker, and he actually he did a lot of the speaking in my webinar before, and then he will share his some of the he is really fantastic. So he will deliver about his insight and his experience like a P2E is a play on, right? Because the game is one of the few cases actually that can make money in now with the metaverse. So he will talk about what is mean by the P2E and what is the matter with the metaverse. Jim, why don't you start?
Thank you for the very kind introduction and for inviting me again. And in some ways, you know, since I've done sort of a nuts and bolts discussion last month here and in the past with slides, I'm going to do this more as like a conceptual freeform sort of discussion that would interest the undergrad philosophy major that I was if I were coming through again. But the topic I'm interested in today, like from the metaverse and play to earn perspective, is, you know, beyond scarcity, what actually creates value in a gaming or entertainment scenario. And that's different from sort of the broader NFT discussions that are out there and like all these great projects, and then you have some not so great projects. Many of, you know, the ones that people are familiar with are either sort of PFP projects, which are profile picture projects, like, you know, Bored Apes, where you buy a piece of artwork, and that sort of transcends, you know, like the real world art world by, you know, making you part of a virtual community of people who own these, all have separate variations that have different value or different, you know, rare aspects to it. And that sort of creates the value, is like, you know, the scarcity, it's 1,000, it's 10,000 PFPs. And then the particular attributes that the artwork has and what makes it interesting or unique, which sort of models the real art world if you were at Sotheby's and bidding on something. Beyond that, the particular area that I'm involved in is sort of the gaming and entertainment side of, you know, NFT applications, particularly play to earn, which I think of as an extension of sort of, you know, A, gaming, but then B, role play scenarios, basically, and things that start to become more like a club that you personally are involved with, not just by owning a Bored Ape or a PFP, but by some involvement that you have and some sort of, I think of it as like a springing value that you're generating value based on the role that you're playing within sort of a thematic scenario, either within a game or within an entertainment project. You know, sort of think of, you know, Star Trek and Star Trek conventions of the past. It's like, if you're, you know, going to a Star Trek convention as, you know, Captain Kirk, you're getting a certain, you know, boost to your identity out of that. And if you have sort of a membership card that says that you belong to a club of, you know, Captain Kirk, you know, fans, then you have a certain identity boost to that. And, you know, same thing with, you know, gaming in general, you know, especially multiplayer gaming, where you're part of a community. So I'm starting to think of, you know, scenarios, especially in light of the recent market turmoil, where, you know, there's a lot of fluctuation in value in some of these projects and these tokens, and starting to think of what are the ways in which people actually care about these roles that they play in a gaming or entertainment scenario, and how does that generate value beyond just scarcity. You know, like if I came out with a game tomorrow and I issued 1,000, you know, like say it's Harry Potter and they have 1,000 Gryffindor tokens, and you can buy one if you really want to be on the Gryffindor side. There's something different from that in a gaming scenario where you're actually participating and generating value. So to step back, my project, which I've been working on for the last few years and which started pre-Metaverse as like an interactive entertainment project with role-playing aspects to it. My company is called Neeraj, and you can find us on Instagram. That's probably the best spot. And then there's a link tree from there that takes you to our various Web2 locations. But Neeraj is an app, a gaming app, which is a Web3 role-playing game, which combines AR and VR aspects with a persistent virtual world that we're building, basically. So it has 3 layers. It has where you are as a person within our scenario, which is one aspect in which the NFT comes into play in our project. And that's where you are right now. That could be, you know, in your office or at the bus stop or at Burger King or, you know, anywhere you are right now as a just in the world. And we would get you with AR filters that tie in to our project and drop you into certain spots in our virtual abstract world. And the abstract world is built, you know, largely in Unity, but we also have photorealistic aspects to it that are shot with professional photographers that integrate into this virtual story world that we're building. So that's my project, and I talked a little bit more about it last time and did a demo from it. So you could look back to our April talk for more on that. But in general, and I'm happy to answer, you know, questions as they come up and make this more of a discussion in the chat. But beyond, you know, scarcity, you know, if I start a club tomorrow that's, you know, the awesome club, and I say we have 100 spots, and I go to all my neighbors and all my friends and I issue certificates that say you're a member of this club, it really has no value, like the certificate. And I can put it on the blockchain, and I can make it an NFT, and I can do any sort of, you know, decentralized DAO around it. If it doesn't really have sort of a sense to it, or like a purpose or something like that that ties into my identity, that I'm part of this thing, it doesn't really have any value, whether it's, you know, scarce or not scarce. You know, it's like if you had the first edition book of an author that's you never heard of and was self-published and no one knew about it, it would mean nothing that it's a first edition and that there's only 10 of them. It would mean nothing if it's like a baseball card that I print that is of a baseball player that you've never heard of. So beyond the scarcity, I think that once you make a gaming scenario and, you know, thinking broadly about games and what constitutes a game within play to earn, you know, the specific examples everyone, you know, dives into are Axie Infinity, to some extent Decentraland and the Sandbox as games, although they're, you know, the virtual real estate side of that makes it more like an investment game or a property game than it is sort of something where, you know, there's actual gaming mechanics that traditional gamers would consider a game. And that's where there's sort of a disconnect when people even talk about games within play to earn. A lot of traditional gamers don't really, it doesn't appeal to them because it doesn't have the same narrative arc and the same story building that goes with traditional game design. So looking at those like Axie Infinity, where a lot of the excitement initially is, you know, that it was one of the first major play to earn games that got, you know, tremendous demand and tremendous coverage. But B, there's a lot of criticism that, you know, it's sort of like a working game, like where you're paid to work basically within this gaming construct. And that's not a criticism at all, but it does have certain downsides that to the extent that all the assets within that become commodities, you start to lose the ability to have, you know, a democratized sort of open, diverse group of people playing it, because you can't really afford to buy in if you're the average person. So when I step back and think about, you know, value creation and springing value, you know, what I find interesting is some of the projects where it's like a nominal value when you initially buy in, quote unquote, into a game, and it has, you know, springing value over time where your participation makes your role valuable, perhaps combined with some sort of centralized storytelling or entertainment aspect or sort of gaming twists and turns that are unveiled as it goes on. That's the type of sort of community that could expand theoretically to be a mass audience. And you think of like Fortnite, where, you know, it's arguably sort of like an early, you know, 3D world that sort of, I think, paved the way for all the interest in the metaverse in the last couple of years. But you look at how that exploded, anyone can play that, and you can, you know, just start playing it, and there's no particular scarcity to being involved at some level with that. Whereas there is with the early play to earn games that are out there now. And I want to go sideways for 1 second and say that there's a really interesting discussion that I found on LinkedIn, but it's actually on a bunch of people's blogs, that looks at this book that came out in 2018. I won't use the full name, but it's BS Jobs, a Theory, by David Graeber. And it talks about, you know, not just in the play to earn context, definitely not in the play to earn context, because before that, but it talks about how there's essentially this category of meaningless jobs out there that just are meant to be busy work and take up your time. And there was an interesting thing that I found on LinkedIn from someone named Paul Butler, who I've never met, but it was a very interesting discussion on his blog where it compared play to earn with BS jobs, where it's like you're essentially just paid to, you know, perform some, you know, menial task within a digital world, and then you get value from it, either, you know, through others joining and through demand for what you're creating, or through, you know, basic narrative changes that go over time. So let me see how much time here I have.
Yeah, it's almost time, just 1 minute. Yep.
Are there any, how to spell murate? it's actually Near8, NEAR8 _IO on Instagram. And that'll take you to our various Linktree Web2 properties. But I'd be happy to answer any other questions that come up or any other discussion, because I think it is sort of an important philosophical or building block or economic discussion that goes hand in hand with how do you create the next round of sort of NFT enabled or NFT supported interactive entertainment or gaming properties, and what appeals generally and can also involve sort of a diverse group of people who don't necessarily have a lot of money but do have an interest in participating within some sort of role-playing framework. Let me just look here.
Yeah, I think that we can take the question in after the Kimberly's talk.
Okay. Great. I do see one question that looks interesting, so I'll read it.
We run out of time now. It's almost
okay. Great. Well, thank you.
Finally, we have Kimberly. Yeah, Kimberly is one of our very, very distinguished speaker and valuable resource, because he attended a lot of my webinar and share many ideas, not just for the Metaverse Web3. Also, we share in sustainability ESG matters. So what we are going to, what she's going to talk about is CBDC, so central bank digital currency. You know that recently the MIT Technology Review has a cover story about the money, and then in all of the story about what exactly we talk about, what with the future currencies, and then the CBDC will be the key role, and also other cryptocurrencies role. So if you have any chance and look at the recent issue of the MIT Technology Review about what mean by the CBDC. Okay, so Kimberly, you are mute now, so why don't you start? Oh, I cannot hear you. What's happening? Yeah, I cannot hear you. Can you hear me? But I cannot hear you. Jim, can you hear Kimberly said?
No, I cannot hear. I cannot hear what she's saying.
So I don't know what's happening. So I think that her a Zoom something that the microphone is not working. Oh, I see. Kimberly, you are in two system now. You log in. I think they log into the two Zoom. So probably that may be the problem. Oh. Kimberly, why don't you log out and log into the Zoom again? I'm not sure because of whether your Zoom recognize your microphone, because I think that that may be the problem. So I think that it may be better during she fix her problem. Maybe we can start our panel discussion first. So so we will have some Q&A and panel discussion. That so the Jim and the Yael and who else now? And Narisi, are you there? Okay, so I think that here is some very interesting question from the Turan. So you look at it. I think that it talk about like some interoperability of the ownership in the like between the two like a metaverse platform or something like that.
Where are you reading the question?
Yeah, so you have a like a Turan question. It's about like for example, you have a like a metaverse and you have an owner NFT in one place. And then you want to like you want to move on to the another like a metaverse, and whether you still keep the NFT. I think that there may be no problem for the NFT side, because if they are based on like Ethereum, yeah.
There is an issue. There is definitely a big issue right now, especially in the gaming world, where you have assets that are inherent to an ecosystem, especially if they're using their own blockchain. Because literally, as I explained in my lecture, you're building on a different environment, and these environments don't talk to each other. So if you can't move it. Literally, it's built in one place. You can't move it to another place. And I'm not sure that it's so important maybe for like a dress you buy in then one metaverse, you want to wear it to another. But in the gaming world, it's really important. So actually, there are quite a few startups right now that are solving the problem, but really what they're doing, frankly, is not necessarily enabling the movement of an asset from one environment to the other, but creating like a digital copy, which is a weird concept for an NFT, or maybe not so weird, because you can copy a picture of an ape 50,000 times, right? So there's different ways to solve it. But I think the most interesting kind of parallel to this question would be, when is there going to be one standard, kind of like what we have on the internet now, the TCP/IP protocol? So which is really like will there be one standard for a metaverse, which will make it very easy for people to move and own assets across different platforms?
Yeah, thank you. I think that the another thing is like moving around, like their avatar is there is a several startup also working on I think the interoperability is a big issue in the metaverse, right? So yeah, there will be keep going on the innovation to solve one by one. I think it's interesting.
Alex, there's two sides to it really, and I think that that was just touched upon. There's like the interoperability sort of at the blockchain level and at the project level, and that you think of, where you read that Sandbox is now integrating with X or Y, and that they're creating a pathway to port your asset into Sandbox. That works in that sort of construct, but it doesn't really work in a true narrative or gaming construct, because it's like if I move my Fortnite skin into some totally different game, it loses its meaning, because it's not part of the narrative arc, it's not part of the storytelling, and it's not part of that world anymore. So it's like, yeah, you could actually wear your skin somewhere else, but it wouldn't really have the same meaning by definition. And I think that's where people are used to the PFP side of NFTs, or like concrete digital assets, like that you're moving from one place to another. Like if you buy a Ferrari in one ecosystem and move it into another, that makes sense to people. But when you get into sort of narrative issues, it doesn't make sense as much, because once you leave the game that you're in, it doesn't really serve the same purpose.
Actually, oh, you're still there. Hi, can you hear me?
Yes, I can.
Yeah, he is an expert in legal aspect of the all kind of the digital assets. So yeah, it's a good opportunity to hear from him about he's like inside about the legal aspect. Usually it's very confused for unless they are lawyer or some other legal expert, actually is very confused whether NFT is a security or not, or the other, like, for example, Yael talk about like a deal like a space asset to tokenize, whether they are security or not. So could you share your insight about that?
And it's going to depend on the unique, whatever the characteristics of the specific NFT are. If it's something more like a collectible, it's probably not a security. If it's a fractionalized interest in a collectible, it might start to look more like a security, because then you're issuing or effectively shares of whatever that thing of value is, the collectible, real property asset, whatever it is. And so that intermediate step is where the SEC might say you created an instrument and or you've created a platform where you're saying, give us your money as an investor and we're going to do something, whatever it is, that's going to generate profit for you, whether because you're getting some percentage back from us as a return, or because of the stuff that we've said we're going to do, the value of your fractionalized interest is going to increase in value. So there are a couple different ways, that it could be a security over time, even if it's initially not designed to be one.
Mm-hmm. Yeah, I think that I'm also a lawyer, but I'm not practicing. I'm more like a core innovator rather than a lawyer. But I'm educated and I passed my bar, and I'm currently a New York State attorney. But still, I'm not a major in the security law. I'm mostly in the intellectual property and technology law. But always that kind of the issue about whether it is security or not, and what like regulation in stepping or not is, recently there are a lot of the like a big issue in crypto world was like something like a Luna. You maybe heard about that. Luna has a stable token, like the algorithmic, like a stable coin, like a link into another cryptocurrency, and then their price shut down, right? It's a billion to zero, right?
But something like Luna, I mean, so if you have, if you have an NFT that's representing an interest in real property, you're saying your NFT represents, a tenth of an acre of land, in this zip code or whatever. That doesn't necessarily, dirt is not a security. But again, it's the intermediate layer where someone says, I'm going to buy this dirt, take the actions that Yael was describing, and put it in an LLC, create these instruments that fractionalize the interest, and then create a platform through which there's liquidity for this market, and through which you can hold this thing, and maybe you don't have to hold it forever and wait for the land to increase in value. Maybe you can, if the land is perceived to have been at an intermediate point risen in value, you can resell it into the secondary market we've created. Those are the sort of factors the SEC has looked at, even if they haven't confronted these specific cases. So in something like Luna, if you have just an asset-backed stablecoin, again, that's sort of more like the dirt. You're saying this represents an interest in the $1 US that we've deposited in an escrow account or whatever, for an asset-backed stable, like a fiat asset-backed stablecoin. An algorithmic stablecoin, starts to, from the outset, depend on the efforts of others for you to realize, value. And that may be, preserving your value and allowing you to trade it later when it's worth more or whatever. Those actions in the background can start to have real significance for securities law purposes, such that an algorithmic stablecoin might create a securities classification risk where, a dollar-backed stablecoin would not necessarily.
Mm-hmm. Yeah, so I think that I'm not with the government actually, but you know that there was she may be still there is a SEC commissioner we call like a crypto mom, right? Because already expressed because of the government position is to let people innovate, right? Is give some honeymoon time, right? And then try to experiment until certain time is really like some problem with the society, right? So I like the position, but still this kind of thing is even if Metaverse is growing, Web3 is growing, and the digital asset, especially NFT and other things are growing with the big issue with that. For example, like confusing about like people are confusing about, for example, that Yael talk about the like put into the like Web3, for example, real world asset, and then for the if you tokenize your real asset like NFT, so NFT is just one tokenization, but if you can be like putting the fractional ownership, and then in that case actually it can be security in some way. So it should be very careful about it. And then also another thing is that like put into like a DeFi, and then put in like for the DeFi pool and like automatic like a market maker mechanism and liquidity pool, and then you have a like a putting your like a digital asset to the pool, and then mint the like a fungible tokens, and then own it, and then in the through the market, and they can be like financing or whatever. So all kind of the complex situation that happen, and then it's very complex like a procedure, you know, because at the starting actually the Alex talk of the Huawei test, but whoever actually can apply all kind of that kind of situation to how you can test all the element of the Huawei test, whether it's security or not, right? So do you have any like some takeaway that to careful about the issue with whether the investors or the like not just not maybe the institutional investor is okay, but like normal people to invest something that they should be careful about whether it's a security or not?
And I guess the first thing I want to say is that you referenced Commissioner Peirce's safe harbor proposal. And I get a lot of questions about that. That is not law. So she made that proposal. It has yet to garner 2 other votes on the SEC that would be needed to make it law. So right now, it's just something Commissioner Peirce said. It's no different from something someone says in a speech. You know, it may be nice to think about and nice to have someday, potentially, but it's not law. So I wouldn't want anyone to rely on a sort of safe harbor that does not presently exist in the US. As for, you know, quick and easy tests of what's a security, I mean, there's not, you know, and perhaps the SEC will put out regulations of some sort to try to clarify this further. You know, I think probably the easiest thing to do is look at whatever it is that you're going to be buying into. If whatever you're going to be buying into, be it a platform or a crypto asset, is of interest to you as a place to invest your money because of something that someone else, the issuer or someone acting on their behalf or as an affiliate of theirs, is going to do, whether that's building out an ecosystem or taking additional actions to get a crypto asset listed or to increase the number of types of crypto assets they accept on their platform, whatever it is. Someone's going to make their business or their ecosystem more attractive, or is going to otherwise generate a return for you as an investor by giving you a percentage of returns, something like a dividend or something, you know, then the SEC is going to look at it and possibly, you know, deem it to be a security. And, you know, I think there was an example of Polkadot given earlier. Does decentralization muddy the waters a little bit in that analysis? You know, undoubtedly. I don't know that it prevents the SEC from concluding in a given case, this is the security. You know, look at Polkadot's website. There's 3 founders listed. were the SEC to decide to go after Polkadot and request information from them, I think they have a fairly straightforward path to reach out to at least the founders and say, hey, we've got some questions about how this has been marketed. Can you give us some information? And we go from there. And under the analysis, they ultimately conclude this is too decentralized. It's going to be too difficult to make a case here, possibly. They haven't put out any guidance on decentralization yet. I mean, Bill Hinman floated it in his When How We Met Gary Plastic speech in summer of 2018. And I think it really, has its attractions. But, again, it's something I wouldn't necessarily want people to rely on, is that's an absolute way to escape SEC sanction. But if you take these additional steps and, it does make it a little more difficult to reach that conclusion.
Thank you. Yeah, so I think that it's almost time. So I would like, because we missed Kimberly's talk about CBDC, so I'd like to show that this is maybe in the future, what commerce in Metaverse and how we utilize NFT like DeFi and everything we talk about in CBDC. So this is one example, like a commerce system in the future in the Metaverse. So it discovers everything in an example. For example, that here is that recently the old topic in the Metaverse is about the virtual space. So here is a virtual space and here is a real space. But actually they are connected. They can be like a full cycle of the economic system in the commerce. So for example, Yael will talk about what the real world asset can be put in here in the virtual space. The advantage is that because the people can join your virtual world in the Metaverse and using your NFT or whatever that avatar, and then talk about for example Neeraj talk about the fundamental building. One of the fundamental building block of the Metaverse is their identity, self-sovereign identity. So they represent who you are in here, and then he for example he want to buy some car, right? In the virtual showroom is popular now, and then he look at it and they tried it in the virtually. Because this is an NFT based a digital twin car, so he can exactly the experience about what are the model, color, and then how they're driving, and then finally decided another agency of this dealer will be talk with you, and then you decided to buy it, and then you pay by some virtual currency, so whatever cryptocurrency, Bitcoin, whatever we talk about, and then in the return that you will have ownership of this car in virtually, so through the NFT here, right? And the beauty of this mechanism is that because you also have a virtual bank, and then you can put into your NFT. And then you can have a cryptocurrency return. So you can have a financing system also in here. So everything you've done in the real life can do in the Metaverse. And what you have in the real estate is actually what they really want to is a delivering of real car, right? Real asset to you, right? So they will deliver to you. So some kind of actually here is something happening is what is the legal right? You got the NFT. What do you mean by the NFT? Usually we think about it. What you have your NFT, whether they can be really represented like a title, certification title in real life. So this is something that in legal matters. But anyway, you should consider about what is the obligation and what is the legal right you have. The meaning of you have in NFT representing your real life asset, right? So you should be consider about it. But anyway, you can have this kind of mechanism, and then there is a trust. If there is a trust that you have a ownership, and means that you have a title of the ownership in the real life, and then they will deliver to you. And another story, the digital twin, and then you can communicate with your factory directly. Is another like aspect of the metaverse. And then why CBDC is required? Maybe something, another like universal currency will be needed. But my idea is that in the future, maybe if you have a universal currency can apply to real life and the virtual life, it will be better, right? It's a cryptocurrency. You need some realization of cryptocurrency. Now only through like exchange, right? To change your Bitcoin, whatever, you through your exchange. But if there is like a guarantee by the government, like a CBDC type, and then you don't need to like exchange, and you can use it. But the problem with whether it will be like completely match with the idea about the Web3, the decentralization will be compared with the CBDC is another problem. So actually, I'd like to hear from Kimberly today about what the role of the CBDC, and then what will be the feature of the CBDC to like whether it's an important role with the CBDC. But unfortunately, they miss it. But I hope that we'll have a chance to in another time that they may have hear from her about this kind of the CBDC convergence, what will be the like challenges, opportunity with the metaverse. Okay, so I think the stop here my sharing. So is there any question? Oh, okay, we already passed 50 minutes. Thank you for everyone that stay here for a longer time. Yeah, I like this kind of topic, fascinating, and then we can keep talking more and more, right? Especially that I'd like to talk with like Jim about the Python, and then Ashley about the legal aspect, because I'm not practicing, so I don't have any colleague here in legal lawyer. Actually, this is my first time share my idea about something in the legal matter, Ashley. And then he is a little expertise and informally with the SEC, so he hear a lot of the insight, and Jim also insight about like Python and other, and especially the Yael. Maybe I will see you because you see there I'm really fan of the like this kind of the real world asset tokenization, and I make a lot of the system about this. So
appreciate it, Alex. Great content. Thank you for inviting us.
Yeah. So if there are any question, and then I will, I said that I will share the like the recording. And there's somebody ask about the presentation, but that's not my control. But if the authors or the like, because the speakers are authors, so if Jim or Jim, you just talk, but I think the Yael's presentation is really nice. So if you can share, then you can let me know where can they access to your presentation. Okay, fantastic.
Yeah, I just shared mine here in the Zoom, and I'll send it to you, Alex. You can send it with the recording.
Yeah. When I send the link to the recording, and then I will send this. Yeah, this one, right? It's okay. Okay, so I have it now. So I have a link. So maybe I will, if some other want to slide it, and they can ask it to the like a speaker directly, or maybe I can ask them. Okay, so thank you, especially the distinct speakers, and then fantastic audience, and then other like Ashley is unexpected that he stay here is very busy, but share his insight, and then everyone to share idea and then their question. Thank you very much, and hope you have a good time. Yeah. Thank you.
Thank you.
Yeah.
Thank you.
Yeah. Bye bye. Take care.
Bye.